It's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. Hope you guys are doing well. This is a really late video, but I thought I should do this one. It's not going to be that long today. We're just going to look over the market cap, look at where Bitcoin is sitting right now, and I want to give you guys some trading tips from a person who's been trading for 12 years, almost 13 years. So just some tips for you guys to think about, and so let's get right into it. So Marco's crypto Christmas countdown pick for today, the 17th of December, is Cloak Coin. People, I love these anonymous tokens. They are going to be vital in the future, people, I'm telling you. So Cloak Coin is as I said, an anonymous token. Its symbol is Cloak. Its price currently is $10.52. Marco's cost was $6.47. His gain 63%. And just to give you guys a little background, if you don't know about Cloak, Cloak is a privacy coin and a competitor to Monero, Dash, Zcash, and Verge. Cloak is undergoing an audit of its open source code, which should be completed before the end of December. This coin has excellent privacy. Some say it's the most private of all privacy coins and has a good dev team and community. Clif data is forecasting several very shocking pops in price late December and early next year. Cool, that's what's up. I like Cloak. I definitely like. I did not get a chance to buy, but check Cloak out, people, for sure. But yeah, it's pretty late, but I said I had to do this one really quickly. And been a lot of chatter around at least the circle of people I follow regarding trading and, you know, just who's right, what's going on, this and that. I saw a Silvertooth video, and he's defending himself. I guess Trader Boss said something about him or something. I don't know. I don't follow Trader Boss. But yeah, like, if Silvertooth decides to do what he does, then he does. Like, maybe the universe gave him a sign to go all in on one position. You know, I'm highly against doing that type of maneuver, but like I said, you take more risk, more reward, right? Or loss. So he's willing to. It's all about your attitude going into it. Like, as long as you're not going into that trade like a risky trade, what we used to call in trading, that type of move is called a cowboy move. So Silvertooth is doing a cowboy move and putting it all in and rolling the dice, and that's, hey, that's not, is nothing wrong with that if he is comfortable with the outcome either way. If he's willing to lose, you know, a large amount of money from that trade, then it's fine. It's nothing wrong. It's just that when people have those cowboy tendencies and they make those trades and they're not mentally prepared for a huge loss if it occurs. I don't think that's going to happen with EOS. We're in such a bull market. You can, like I said the other day, you can throw a dart at the wall and probably hit big no matter what you pick. So that's cool, but we're going to talk more in detail about trading, how to manage risk, how to assess how well you're doing, and all of that good stuff. So first, let's go ahead and take a look at coinmarketcap.com really quickly. We're currently sitting at, wow, almost 600 billion, 572 billion right now. Bitcoin's dominance is sitting at 54.6%, and a little pullback at the moment. I noticed that earlier when I was out and about, and yeah, we got a little pullback in some of the top five, but still looking good. For the last month and a half, 2-3 months, we are looking very well. So that's cool. So let's take a look at the Bitcoin chart really quickly. We are pretty much in orbit of Saturn, I would say. I think you could clearly see that as well, which is insane. We're going to get a correction, and I've been saying this, and this one was a correction, but it was bidded right back up. But we're going to get a nice serious correct, not serious in the form of percentage wise, I'm just saying we're going to get a real correction where it settles, you know, the correction pans out over weeks, 2-3 weeks at some point. Don't know when though. It's such a unique situation right now in cryptocurrencies and Bitcoin, because you have new money coming in, you have futures trading. I know tonight the CME futures started trading, I believe. And so new money, and I want to talk about that as well. I got some clarification on how this could affect the futures, that is, because my whole thing was the futures are settled cash only, so there is no direct need for the exchange, the CME or the CBOE, to actually hold Bitcoin, actual real Bitcoin, to settle these futures contracts that traders trade. So I was a little confused about how this would relate to Bitcoin spot price. When I say spot price or cash price, that's the actual real price of Bitcoin, where you can go on an exchange and buy it at that price. I was a little confused about how that would affect that, but I was listening to Richard Hart, really smart guy, and Tone Vays. I don't follow Tone Vays, but I do follow Richard Hart, and he kind of clarified some things, and we'll go through that. So I guess I can talk about it right now. So essentially, how the futures will affect spot price or cash price of Bitcoin is essentially if people in the futures or the exchange sees shorts, not the exchange, but if traders in the futures markets want to short a futures contract, right? So that's buying what we call a put. So if they do a put on a futures contract, what they probably will do, or what institutions will do, is go and buy Bitcoin, the actual spot Bitcoin, the real Bitcoin asset. They'll buy that, they'll go long. So buying that will be going long. And if they have a short position in a futures contract, that they'll be somewhat hedged in that manner. So this may be a little technical for some, but for those of you who do understand how some of these financial markets work, that's how indirectly, I forgot what he called it, cash carry or something like that. But essentially, it's kind of like a indirect way that Bitcoin price, cash price, the spot price of Bitcoin, the real price of Bitcoin asset, how that will be affected by futures is if people want to short, but they want to kind of cover, or what we call hedge, some of their position, so they're not fully 100% risk on to the short side, to the downside. So when we say shorting, we mean that we borrow the asset at a particular price and hope that it goes down. And so you make money going down in the market. And then when you want to take profits, it's called you cover that position. And that's when you make the difference from where you shorted to where you covered. And again, what he's thinking is that institutional traders will be doing a little hedging so that they're not fully 100% short the market. They may go and buy over the counter or at exchange or whatever. I don't know, probably over the counter with the institutional guys. They'll buy Bitcoin, buy real Bitcoin to hedge that. So that's kind of the scoop on. So Bitcoin will be affected in a positive manner, I believe, for the near future in regards to these futures trading. I'm just going to compress this a little bit. So that's kind of that. what I'll probably do, the next chart, next time we look at a chart, maybe tomorrow, I'll draw some Fibonacci retracements, some new ones on a shorter time frame, to just see where we may have some retracements going on here. So I'll do that the next time we jump on, people. Today, really, I just wanted to talk about, like, you know, it's a lot of talk about traders, you know, and you're having a lot of people come out the woodworks, you know, being these expert traders in Bitcoin and just not, you know, just all the altcoins and stuff, cryptocurrency, current market in general. But what you have to understand, trading, and I mentioned this under Silvertooth's video, his latest one he did just a little while ago. Trading is not based on 1 month, 3 months, 6 months, not even a year. Your trading system needs to work perpetually, indefinitely. It can't just work for 6 months, a year. So the longer you are trading and it's working, the more validation there is in your trading system. Because there's no point in a trading system or a trader being successful for 6 months. Because that means if he's unsuccessful, if his trading strategy stops working in 6 months, guess what? He will end up losing all of his profits, and then will eat into his principal shortly thereafter. So you can't judge anyone, a trader boss, or, you know, whoever, Tone Vase. I don't follow him, but, you know, I hear a lot of chatter about him being a great trader, or, you know, having great calls and stuff. You can't judge him, good or bad. It goes either way, on 3 months, a month, 6 months. It has to be a long track record. You can kind of project outwards over, maybe if you're following someone's trading system, or you're using your own trading system for 6 months and you're seeing profitability, that gives you confidence for sure going forward. But you need to see 6 months, a year, year and a half, 2 years, 24 months. That's when you say, okay, this is an actual great trading strategy and a great trader. This is something you guys have to really take heed of. It's not about a month or 2 or 3, or, like I said, even 6. Because what happens is markets have like, it'll go through patterns where a certain indicator works, and then 6 months later it doesn't work as well. That indicator and its parameters have to be fine-tuned. That's why I teach trading on a naked chart, maybe using volume. You can use moving averages, but learn how to read the candles. The candles tell you a lot. A lot of these having all these indicators on your chart and doing all this, what happens is those things have to, it's not a static type of thing. You have to adjust those parameters in those indicators. That's what many traders aren't telling you. Okay, you have to continually adjust things and move with it, and it's not a static type of scenario, and that's the hard part. So the less indicators you have, the better, in my opinion. Now, when I code and develop my algorithms for FX, you have to constantly do back testing, look for, try to do as much number crunching and all of that as possible to keep your algorithm on point going forward. And you, like I said, you back test as well, continually back test. But with the algorithms, you do need more indicators, because you're not using your brain, which is a quantum computer basically. We don't have that type of thinking power in a computer, in your average computer, that we as consumers have. So you do have to rely more on indicators and such to make that algo work properly. So that's just a tip. Again, don't judge a trader good or bad off of 3 months, 1 month, 2 months, 3 months, 6 months. It's got to be longer, because like I said, we're in a bull market. You're going to be right now. I'm up tremendously in my portfolio, not because I'm a genius God sent trader. No, it's because everything's going up. Okay. So the dangers in thinking that someone's a great trader in these types of times is that what happens is you get more and more greedy as you see more and more gains. And what happens is when the trend changes, you get slaughtered. You lose everything. Okay. And kind of segues me into my next point about trading. Tip number 2 for you guys: money management. That is how you stay in the game, people. It is not your trading system or strategy. Is not number one. Number one is trading, managing your trading funds, money management. I go into that in detail, you know, when I'm doing my trainings and stuff. But money management is the most important part of trading. Again, many traders don't tell you that. They just try to sell you on their trading strategy. But trading strategy precedes money management. Money management is number one, then trading strategy. So just remember that, guys. You want to just make sure you balance. If you have $100, I'm gonna keep it simple. You have $100, right? You want to probably divvy it up 10 to 15 if you want to be more aggressive, 20% per trade. Well, you know, divvy it up as far as if you're trading 3 or 4 different pairs, have, you know, 20% in each. 4 or 5 pairs, you want to have 20% in each to keep money management, you know, keep everything in check, just in case one of them goes belly up. You've only lost, let's just say it goes to 0. It won't, but I'm just saying you only lost 80% of your portfolio. You can continue to go on. The key in trading is to stay in the game. If you get too aggressive, you put all of it in one pot, guess what? You won't live to see another day, because if that trade goes against you and you lose all of your money, all of your principal, and even gains and principal, or a majority of it, guess what? To go from, let's say you're at, your portfolio is at X amount, right? So that's 100% of your portfolio value. If you go from 100%, you lose. I'm just going to keep the numbers real straightforward. If you're at 100%, you lose 50% of your portfolio. Guess what? It's going to take 100% to get back to your previous amount, portfolio amount. So that's why you have to money manage your. You could just do some YouTube, or not YouTube, but Google searches on trading, managing your funds while trading, and they'll bring up some good articles on that. So that's number 2. So like number 3, I guess kind of relates to number 1 as far as it's less of a tip, but just more of a understanding. Trading, it's easy to enter a position. It is hard as hell to know when to exit a position. That's where the real trade, like 90% of your trading is done on the exit, not on the entry. Because when you enter a position, let's say you entered it too early, right? Or too late. Let's just say too late. And meaning you thought it was, let's just say too early, right? You entered a position too early. You thought that it was done going lower. So you enter the position, but let's say the market continues to go down. Well, you haven't realized any losses there. You can wait until it gets back to your break, your entry point. Now you're break even, and now you can, manage your position on the way up. The exit though is final. Okay, so you have to get that somewhat right. You can't really time tops and bottoms, but I'm just saying the exit is so much more important than the entry. And so many times people hold on too long, get out too early. These types of things, learning when to get out of a position, can't learn overnight. You can't learn in a month. You can't learn in 2 months. This type of it's a skill. This type of skill takes years to learn. And unfortunately in our society, we're about quick returns, quick results, and it's unfortunate. But if you're really passionate about trading, you really want to learn it, you have to take your time with it, and don't try not to get frustrated. You will get frustrated, but try not to. And there are different levels of learning how to trade, because first you may do some paper trades, or nowadays many people don't do paper trades, but you'll back test, you'll do some trading on historical data, and then from there you'll do a demo. You'll open your demo account and trade with demo money, play money, and then from there start trading with real money. And that's when if everyone won't be a good trader. That's another thing. Let me just say that everyone won't be a good trader. I suggest that 98% of you just invest your money, not try to trade it. I'm going to show you guys something really quickly. So really, to determine if a person is a great trader, again, it takes time. You need to see their track record, like a detailed spreadsheet of their track record, or follow them for 6 months or so. And what you want to do, like, I don't know if there's a basket or index that has a basket of cryptocurrencies that represents the entire market kind of closely, the growth of it. But if we take the first 100, we could do that, the first 100 coins on CoinMarketCap. Just take all those, right? And let's say we have $100,000 to invest, and we just spread it across all top 100 coins, right? Is a trader, if I went with a trading system or a trader and took that same amount of $100,000, how much better would I be off versus just holding a percentage of all 100 tokens and just letting it ride, letting it go up? So those are the types of things you have to look at, not how much that person or trading strategy has done in a month, or even less. I've heard people talk about what they've done or whatever in a week. That's just too short of a time frame to know if that's just pure luck, or if it's just the actual market doing that, or if it's your trading strategy. And real traders would know that, right? So those are things to look out for. That's how you track how the alpha of a trader. That's how you do that. You track it against, let's say, 100 tokens. If you took that same 100,000, threw it in those 100 tokens, versus if you took that same 100,000 and traded it with a trader or a trading expert or a trading strategy. That's how you'll determine what is better. So that's pretty much it for today, ladies and gents. Thank you for watching. Make sure you like and subscribe, and definitely join that Webbot chat room. We getting it in there, people. It's your boy Crypto Blood. I'm out. Holla.